I'm Sandra Koschel from KSM Group. Today I want to talk about gearing. What is this gearing? In my experience, most clients have absolutely no idea what it is, and I think that's because of the word. We should just say borrowing, because that's all it really is. Gearing is simply just borrowing. So if you gear an investment or property, you are borrowing to buy it rather than just using your cash only. This interest is tax deductible, so it offsets against the income you earn on the investment, which you have to pay tax on. As such, gearing reduces the amount of tax you pay, and that's why it's so popular and everyone talks about it. Okay, so continuing on, there's positive gearing and there's negative gearing. So let's simplify this also. Positive gearing means that after claiming all expenses you can against your investment, including the interest you pay, you've made a profit on the investment. That is, the income is more than all the deductible costs. Negative gearing means that you make a loss after deducting all the costs, including the interest. This loss can be offset against your other income that you have to pay tax on, like your salary and wages. Because your employer has deducted already the tax on your wages and already paid this to the tax office, and because you now have this loss, which reduces your total income that you have to pay tax on, it creates a reduction in the tax that you have to pay or a tax refund back to you at the end of the year. And this is why everyone talks about negative gearing. So let's look at an example. You have a rental property which you rent out for $500 a week. So the total annual rental income that you have to pay tax on is $26,000. You're able to claim all the expenses relating to that property, like rates, water, body corporate fees, insurance, repairs, real estate agent fees, sometimes depreciation on the construction, depending on the age of the building, and interest on any borrowings if it is geared. In this example, these expenses total $41,000. So there's a tax loss on this property of $15,000, so it's negatively geared. This loss gets offset against your salary and wage or other income, and so can reduce your tax by up to $6,975, and this is every year. Your tax saving actually depends on which tax bracket you fall into. So now you can see how negative gearing works here to reduce your tax. Now you might be thinking, but hang on, if I have to pay all these expenses, which are more than the rent that I'm getting coming in, how does this help me in the long term? And that's a valid point. But keep in mind that most of these expenses you do have to actually pay, but not any depreciation on the construction. You get to claim that, but you don't actually pay it at all, unlike a bill like rates and so forth. You can claim the depreciation of the construction of normal residential properties if they're built after 1987. All you've got to do is get a report from a quantity surveyor once, which is simple to do, and the cost of that is tax deductible, and away you go. Importantly, the concept of negative gearing hinges around the notion that the capital growth of the property will more than offset the cash you are paying out to fund any loss. So, you're wanting your property to increase in value over time more than the after-tax cost of holding the property. This can be calculated quite easily by your accountant and should be reviewed regularly. We've seen how you can gear a rental property, but the same principle applies to other investments too, like direct shares and managed funds. You borrow to invest and the interest is tax deductible. It can be an excellent tax-effective way to build wealth. We give a lot of advice to clients about this. You can in fact borrow the entire amount to be invested without putting any cash of your own in and claim all the interest as a tax deduction. You can prepay a whole year's interest up front and get a full tax deduction. You can even borrow this interest amount. Some of these investments can be capital protected, which means you are safeguarding your investment. The dividends and earnings along the way are yours, as is the capital growth. We have many clients with these investments in place who reduce their tax by thousands of dollars each year. As well as saving tax, some of our clients have achieved returns on equity of up to 178%, and that's because no initial outlay is needed and the investments have performed extremely well. These investments need to be looked at by a qualified financial planner in conjunction with your entire financial situation. So please seek advice to suit your personal circumstances. Well, that's gearing made easy. Please feel free to contact me with any questions you may have, or if you would like any further information on the specific geared investments I've discussed, please contact me.